going on, guys? So about every week, once a week, I hold office hours. And this is just a time that's allotted. So different CFOs, different financial managers, we can all come in one place and kind of go back and forth and answer some questions. So I'm giving you guys a little sneak peek into what that looks like, where we're talking about a property management company, right? One of the other CFO's clients, they're just having issues with understanding where to kind of move the money or how to move the money and keep it clean inside of their financial software system, right? Their accounting system, which is QuickBooks, is what they're using, and their actual management system, right? And management system for property management can be like AppFolio, Diem. It can be Guesty if you're using short term, so forth and so on. So really understanding that connection there. So today we talk about a little bit of those topics and some different things too. So hopefully you guys enjoy the insight. Right now he owns an Airbnb management company. He does or does not have a Airbnb management software program that he's using. All right, so what he does is he collects all of the rents from any type of platform where they're booking from. It can be Airbnb, it could be Expedia, it could be whatever. He's collecting all of that into his personal account. And then from there, he pays out the owners after he collects it all. All right, cool. So in management, that's essentially could be referred to as an escrow account. It's a place where all the incoming receipts are held, right? And then it's paying out the tenants. And then from there, his management fee or whatever his actual income is would come out of that and go to his operational account. All right. Right now, he's currently marking up maintenance and some cleaning. All right. And by that, he's doing the booking and the coordination of the maintenance crew and the cleaning crew. If they're charged $100, he might mark it up to 125 or $150, and he's collecting or keeping the spread as revenue for him. So he says that he's his own insurance company, simply meaning if something goes out, he will pay for it himself. He's not actually a bonded insurance company or insurance provider for third-party people. He's just doing it for his own company, correct? All right, so he collects all this money. It sits in this one pool. He then pays the owners, and he takes his piece out and he puts it into OpEx. But after he pays the owners, then he decides to invoice them for the markup on maintenance and cleaning. And then it's the owner's responsibility to then pay him back. Yeah, it does. It does change his bookkeeping picture now that he's controlling the whole kit and caboodle. It's not just, for example, money's going into Airbnb or whatever streamline, and then as it all gets washed out in there, the only money he ends up collecting is what he's actually due. It's saying that his banking facility controls all of it. So we just look at a couple different things there. We have to understand what's income and what's pass-through revenue. All right. So when tenants or guests pay rent, all right, and it belongs to the owners, a lot of that is pass-through revenue. Cleaning costs themselves are going to be pass-through expenses, right? The invoice to the reimbursement is pass-through revenue. The markup is income. So when we think about that, if we ever think about a balance sheet versus an income statement, typically on the income statement, we don't need to calculate or account for all pass-through revenue. We can, but that just means that there's going to be two additional line items for every single category of pass-through revenue, right? An income and an expense. All right. Or we can let it live on the balance sheet, where literally there's a trust account where the balance goes up and the balance goes down. Now in Streamline, here's ultimately the question. A lot of people will say, all right, well, hey, if all of these transactions are going through, how else are we keeping track of it if we don't spread it out into the financial statements? Well, we have to remember, typically financial statements are just used for us to get the overall picture, and there should be some sort of back-end operating system that gives us the details, right? And so that's what Streamline should be able to do. Out of this, theoretically, this $30,000 that we collected in rent, how much belongs to owner A, B, and C, all right? And so that doesn't need to be displayed inside of QuickBooks. So we can choose, keep it on the balance sheet as one large escrow account, if you will, and then only extrapolate the money that he's collecting as income. It gets moved off the balance sheet and actually moved to the income statement as income, right? As it's all collected and then moved out. So that's one way to do it. The second way we can potentially look at this is because it's passed through, we can make accounts for it. but where would we want to actually put them, right? And so when we think on an income statement now, let's say we want them on the income statement, we want to look at the operational performance, NOI all the way up, net operating income all the way up is basically how is this company operating profitably. And so we only care about the income that comes into the company and the expenses that belong to the company. So the second recommendation is that any pass through we treat as an other income and an other expense. So we can move in there rents received as an other income, owner's payout as an other expense. We can do cleaning reimbursement or whatever the case is. All those other ones we can do that down there as well. Right. And so they'll balance out, but ultimately when we look NOI and above, it's all operations of the actual company. So that's another piece. Really depends on what you think would be easier for you to kind of guide them on and what you think they'll be more receptive to. Because at the end of the day, it's going to give us the same thing. It's just, shooter's choice. The other thing that I will say to that is just while we're on the topic, having him basically reimburse or charge the clients after the payout is a extra step that has no need to be there. He should simply charge it and only issue out what their net is supposed to be. The reason we look at it that way is twofold. One, he increases the opportunity for him to not collect payments, right? Because now the owners could just delay it or whatever else. So for us on the operational side, we want to look at how well can we control our revenue. And that's one control measure is just simply billing it all at once. Technically billing it all at once, but only issuing out the net allows us to control that revenue before it ever leaves our hands. Because now we're just waiting on this additional revenue, which may not be much, but we're still waiting on it to get back to us. Two, it makes an additional step for the owner. No owner likes additional steps. No client, no customer likes additional steps. They all like convenience. We love convenience. When we look for opportunities, we look for what's easiest for us. So just taking that step out completely is going to help on both sides, customer satisfaction as well as control of revenue. Okay, I'll put it like this. Profit margin per property is great to understand for the owner, potentially. A lot of these expenses that he's paying, because I see your point, but a lot of the expenses that he's paying should not actually be tied to the property per se, right? He's not paying taxes, he's not paying insurance, he's not paying whatever. He's passing through cleaning and maintenance, right? And so really all of his expenses should be, and correct me if I'm wrong, but all of his expenses should be just the operational expense of the management company collectively. Ultimately, yeah, we are concerned about properties, right? Once we basically identify what our expenses are per door that we manage, we want to make sure that we set our bare minimum threshold of, all right, what's the type of income that it needs to generate in order for it to make sense for us, right? If that makes sense, right? So you're going to basically, when you're doing the calculation, instead of looking at the traditional way of looking at profit margin per property of income minus expenses, and then we look at the margins, we basically, for a management side of the house, we don't care about that. That's more of an owner concern. On the management side of the house, we want to know on average, one house is going to cost us, fill in the blank, let's say $600 a month to manage. That's high, but let's just say theoretically $600 a month to manage. That's really high. So let me use a better example. Okay. Theoretically, it costs us $50 a door to manage. All right. If our management fee is 10% and our expectation is making a 50% spread on the management of this, then we would need to at least rent it out for $1,000 because our 10% would be $100 minus the $50 that it cost us. So we'd walk away with a profit of $50 a door a month. And so if you did want to take, and because the reason I had phrased it that way, because if you and him are truly concerned with the profit margin of the property specifically, well, one, you'll need to gather more information from the landlords, but two, that could be a additional service or an additional value that you guys offer as management. It's like, hey, look, we also will calculate your profit margin as one of our landlords or one of our clients. But that's why I'd ask that. If you guys are not doing that, then it's not as relevant to you and your business model. So what I've seen with property managers, because you're right, because like retention is hard, right? If your customer service isn't top notch, then somebody's going to leave you pretty damn quickly, right? There, because there's so many opportunities. So what I've seen some property managers do is some of them provide like a community for the landlords, like let's call it like a Facebook community or something like that, like an online community. So all the landlords can kind of get together and talk and see what they're doing differently in practices. I've seen other property managers offer additional services. So maybe it's, hey, we'll give you a for example, a broker price of opinion or CMA, cost market analysis, or comparable market analysis, and give you an idea of what your stuff is worth every single year. And if you decide that you want to sell, if you sell through us, we'll give you, a discount or a credit or something like that. I've seen some property managers offer education to their landlords. So for example, it's teaching our landlords how to acquire more properties, right? For the purpose of them, of them managing it, the actual property manager. What else have we seen? We've seen some property managers do client appreciation for all the landlords. And so if they're in-state or local landlords, they'll host an event once a year or so. If they're out of state, they'll maybe do a webinar or send a gift. But the whole idea is just like you said, what can you do to separate yourself from the oversaturated competition? Because it doesn't take much to become a qualified property manager, right? Now, how do you become a good property manager is the question. For any CRM that's GoHighLevel backed, right? So it could be white labeled like Pipeline Pro. It could be white labeled like Joinosity. There's another one that's very famous right now as well, but they're all basically the GoHighLevel platform. I use GoHighLevel in this company and also in the real estate company as well. I love it. There is a VA, a virtual assistant program out there called Carpe Diem. All right, like seize the day, Carpe Diem. At least I hope that's what Carpe Diem stands for. But that's what it's called, Carpe Diem. They're based, they're a Middle Eastern virtual assistant company, but they have a team of graphic designers, a team of funnel designers, a team of SEO, search engine optimization, website design, integration systems, all this stuff. And you basically pay them one flat fee to get 160 hours worth of work every month. It's insane, I know. And you go in there, you create your projects with them, and then they go in and they do the projects. They do weekly reviews with you. They do project reviews, client reviews, manager reviews, until the product is complete to your liking. I cannot praise them enough. Within the past 2 months that I've been using them, I've gotten more work done on all of the technical background systems that I don't do well. I got more work done in 2 months than I have in the past 18 months trying to do stuff myself. Yeah, they're amazing. You might. They are. I can't praise them enough, man. They do some really good work, and it's all up to you about how critical you are with the attention to detail. Because they'll make it just like you want it. And a lot of times for me, I'm like, please just get it working. Then we will adjust as we go. So it's just like you told your client, the stuff you focus on, the stuff that makes you money, right? And then you hire the stuff out. And that is, man, it's powerful for sure. Well, so reviews do really matter. There's a ton of different approaches when it comes to reviews. Here's the approach that I live by. Anytime somebody says anything good to you, capture it. All right. Now, I haven't been as disciplined as I'd like to, as I hoped I would be with this. But this means if somebody sends you a text praise, hey, it was a great stay. If they just send you it in an email, thank you so much. This has been amazing. If they actually do put it on Facebook, LinkedIn, wherever, you capture them all. All right. You have this one big, massive document, and it can be in Google or whatever, or folder, where you just capture all of your reviews, no matter where it comes from. All right. Because ultimately, at the end of the day, here's what happens. When the way that reviews are powerful is when people can put their eyes on it and see it, right? So if they can see the review, they can see the number of reviews and the words that people are saying, now they're more induced or more inclined to actually purchase or move forward with the transaction or with the stay. So with that aspect, it doesn't matter where the review lies as long as it's tied back to you. All right. So if Airbnb has the review, but it's tied to your property, cool. You got the review. You know what I mean? So now when they go on Airbnb and they look for that specific property, they should have you high. I know one of my property management friends, when he did, I think he still does short term, but he meant to make sure that every time he set up the profile with Airbnb, he did it under the landlord's name, not under his own. That way the landlord would gain superhost status. So now for some property managers that are Airbnb specifically, they want everything under their name so they can get and maintain the superhost status. And so with that case, if it's a superhost status and you got it on Airbnb, why do you care? Because now you're at the top of the search criteria, right? Now, on the other hand, when we think about reviews and we think about search engine optimization, this has been a debate, and I'm not 100% an expert on this, but this is the debate that I've been hearing a lot about. We're more inclined to look at Google reviews when it comes to SEO because Google's the #1 search engine. Well, technically YouTube is, but YouTube's owned by Google, right? And so we start to look at how all of these reviews kind of tie together. It really lives inside of Google. All right. So sending out a Google review is great. So now to your point about GoHighLevel or other CRMs similar to GoHighLevel, right? They can actually set up review links through there, right? So you can send reviews directly through GoHighLevel. You can have your Google and your Facebook and your whatever. They go in, they fill it out, and they automatically upload it. Right. So that makes it a very streamlined process when you can say upon checkout, you can actually create like a trigger. As soon as the client checks out, this is now sent to them. Boom, boom. It's automated. The other thing about Google that some people are not aware of is just like I referred to in the beginning where, hey man, we can take photos of screenshots. We can take photos of emails. We can actually take those and put them as photos on our Google My Business page. So it's not directly tied to the review, right? It's not actually increasing our search engine optimization. In a way it is through all the technical pieces of it. But on those photos, when somebody comes and looks through, they can still see the reviews there. So the question really boils down to what is it that he wants from the reviews? Does he want people looking at him directly, like his company? Does he want people booking his short-term rentals? Does he just want it for like ego and status? There's no wrong answer. There's absolutely no wrong answer, right? It's whatever, shooter's choice, whatever they want. But once we know that, then we can kind of guide them on the concept of which review strategy might make more sense. I mean, from my perspective as a landlord, there's been a lot of property managers that simply, if they just had better communication, their quality of service would just skyrocket. You know what I mean? So, letting me know when something goes wrong as soon as possible. Letting me know maybe quarterly, hey, look, this is how the portfolio's doing. Our suggestion is that we increase prices on these specific properties. Stuff like that is what like an investor client wants. Because otherwise, we have this property management there that all they're doing is collecting payments. That's it. And that is the bottom tier quality of a property manager. Like, give me more insight. Give me, as an investor client, I have this property with you because I'm looking to make money. I'm looking to, I want this to be something that's carefree that I don't have to think about. So make it carefree for me. Hey, just heads up, your HVAC is now 7 years old. We really want to consider potentially replacing it. I suggest you put a little money to the side this next year and we'll rediscuss it year by year. Something like that. I would love that. Hey, heads up, we've got about, I don't know how many doors people have, right? But hey, heads up, your doors, you got a couple leases coming up. We should really just consider what the market says. Hey, here's a quick update on the market. Here's our suggestion on price. What do you think? Little stuff like that. Don't just be like, because like I have a property manager right now that as soon as the lease ends, they'll hit me up and say, hey, we want to increase, the lease is ending. Do you want to increase the rent? And just look at me. I'm like, yeah, I want to increase. Yes, that's always the question. And then he's like, well, how much you want to increase it by? I'm like, all right, if you don't tell me what the market rent is now, I got to go do the research, which is fine for now. But, make it worth it. Okay, so you guys saw that it was just a casual conversation. We go through different problem sets as needed, right? We make it very, very impactful for whoever's attending. But you saw that we mentioned GoHighLevel several times. Now, GoHighLevel, if you guys are not familiar with it, is a CRM platform, a customer or client relation management system. But it's much more than just that. Not only can you put all of your database, the clients or your leads that you get in there, you can automatically set up email campaigns no matter what they're interested in, right? So, for example, if they're flip clients, buy and hold clients for you, whatever the case is, or in my case, if they're bookkeeper clients, CFO clients, tax planning clients. And when you set up those different individual classifications, you can set them up on individual email campaigns. And it can be email campaigns that are start from before their leads to after their leads to after they sign with you and so forth and so on. And the best part about it is it can all be automated, right? So quite literally, you bring somebody in the system and the system takes care of everything else. You never have to go back and touch it. All right. In addition to that, you can do your reviews like we talked about in there. You can actually link your social media to set up social media posts and all of that good stuff. You can do courses and membership communities. You can do everything from within inside that GoHighLevel. So if you guys are in the middle of really looking for different types of CRMs and you are interested in GoHighLevel, I'm going to share with you the link that I use. Now it's a white label, just like we spoke about inside of the video there. And so this one here is the white label under Joinosity, but it's the GoHighLevel platform. So if you guys want to take a look at it, I will be sure to include the link down below. You guys can check it out. But now, if you guys have any questions about your specific situation or how to move the finances, go ahead and ask us, right? Put it in the comments below. Let us know what's going on so we can answer your questions, guys. That's exactly why we are here, to provide you as much value as possible and make sure that you can master your finances. As always, thanks for watching, and we'll see you in the next video.